I think it's very important to take sort of a long-term view. To have hyperinflation in the system is actually extremely rare if you look through history, and you really need a kind of a perfect storm to occur, like in terms of wage price pressures that's uncontrollable, that whole wage price dynamics that goes on, and of course the spark back in the 1970s was really oil prices. This time round, a lot has to do with temporary factors because pent-up demand is so strong, and of course you get supply bottlenecks as the economy reopens, and that's why we are seeing inflation right now picking up. But I think it's true, I agree with all the panelists here that inflation would start to stabilize going into 2022, because that whole growth momentum that we are seeing so strong this year would likely taper next year. And because of that, inflation pressures would actually also subside. So I think because of that, what one would have to do is that in terms of asset allocation, you have to think and frame up in scenarios. I think currently the base case is things are under control, but of course, you can actually get some inflation pressures, inflation reading in the next few months. It's going to be volatile. You want to put on sector exposures to, let's say, reflation trades, maybe even with the dip in 10-year treasuries now, you might want to look into financial sector that can actually do well if bond yields start to back up again. And of course, you want to look into some inflation hedges, whether it's gold or some of the commodities that can actually do well. So I think that's how one should think about inflation. Should not be too afraid of it, but be prepared for it.